Sustainability and economic impact. So what is corporate social responsibility? Can you what does it mean to you? So it's an ethical framework that suggests an entity, organization, or individual has the obligation to act for the benefit of society as large. Every individual has to perform to maintain balance between society, economy, and the ecosystems. And corporate social responsibility has been discussed since the 1950s. And yeah, so it's very important in terms of integrity. A company with high corporate social responsibility is likely going to have high integrity in a lot of cases. So that's why it's very important. So big parts of it is philanthropic responsibility, be a good corporate citizen. So like give back to your community. Ethical responsibility, be ethical. Don't do things that you don't believe in. Legal responsibility, obey the law. Don't break the law. Economic responsibility, be profitable, make profits. So those are the four pillars of what you need to do for corporate social responsibility. And this ensures that your company has integrity. This is one of the key goals of a company searching for integrity. So that's very important for integrity purposes. And then why is CSR important? Does Buyback want to try?
It is a responsibility towards the society.
Yes, exactly. So it's very important. Yeah, Buyback's right. So we need to give back to our society. And it's good to do good. So it can differentiate yourself if you do good. And also you can, being socially responsible, you prevent damage to ecology and humans. So there's a lot of you can keep the world safe. So CSR is very important for ethics. So it means it makes sure that you have integrity. So companies with very high CSR, corporate social responsibility practices, are likely to have high integrity. So consumers are demanding more social responsibility from businesses they buy from, and the world has changed. Consumers now expect to demand socially responsible business practices. So benefits to CSR, there's many different ones. So winning new businesses, enhance relationship with stakeholders, attracting, retaining, and maintaining a happy workforce, media interest and a good reputation, access to funding opportunities, enhancing your influence in the industry, differentiating yourself from the competitor, saving money on the energy and operating costs, and increasing customer retention. But I'll ask the class here, are there any other benefits of corporate social responsibility? Does Berkey want to try?
I'm not sure, Professor.
Professor, I think it gives a good image to the person or to the organization.
That's great, Tony. Yeah, it gives a great image. Yeah, that's very important for the business to be successful. Yeah, that's great. Excellent. And then so focusing on the right corporate social responsibility issues can contribute up to 30% of your company's brand value. So that's a big benefit for that. And then also there's better customer loyalty and sales. So 42% of how a person feels about a company is based on their corporate social responsibility approach. So consumers care about what the company does for the society they live in. And then operational cost savings. So lessening your environmental impact can reduce your operating costs. And then also employees become more committed and have longer tenures with companies that have maintained CSR practices. So 63% of employees chose improving society over generating profit. Access to funding and financing. So your corporate reputation can affect your ability to obtain venture capital, insurance, loans, and financing. So if you have a good corporate reputation through high corporate social responsibility, you can likely get more venture capital, insurance, loans, and financing. And most businesses are regulated in some way. So having a good name can help ease and reduce your company's administrative burden. So things you could do to increase corporate social responsibility in your business includes reducing carbon footprints, corporate governance, improving labor policies, participating in fair trade, charitable giving, volunteering in the community, corporate policies that benefit the environment, and socially environmentally conscious investments. Can you think of other ideas on how to create corporate social responsibility? Does the chicken want to try? Encourage goal setting. That's great. Excellent. So understand, determine what CSR means to your company and how it relates to your overall mission and purpose. So you need to do that, and also you need to evaluate. So you need to figure out what your organization is doing for corporate social responsibility right now. So you may already be doing environmental regulations, engaging in philanthropic causes, or deploying green initiatives that reduce waste. Research, find out which CSR issues are more significant to your business. Start by referencing online lists for relevant issues in your sector. And then look at the corporate social responsibility or sustainability reports of larger companies in your industry to see what issues they're tackling. Then prioritize, identify which CSR issues are most important to your customers and stakeholders and deal with those first. Engaging your employees and customers is a great way to get going and gain support. And then your CSR strategy has to become part of your overall business strategy. Don't think of it as part of your business, but rather the way you do business. Identify opportunities. Having strong CSR credentials can pave the way for new opportunities, such as entering new markets, developing niche products, and forging strategic partnerships. And communicate your CSR activities to various target audience through many channels possible. So what happens if a company trades or ships products that could be environmentally harmful? Does Denaro want to try this one? So big problems that can happen are that the society will be harmed. So if a company's leaking chemicals in a case, there would be a chemical leakage, and then that would cause issues to the society outside of the company. So people might get sick, people might get illnesses because the chemicals released by the company. So Enron Corporation was an American energy, commodities and services company based in Houston, Texas. It was founded in 1985 by Kenneth Lay as a merger between Houston Natural Gas and Inter North. Enron Corporation was one of the leading suppliers of natural gas, communications, pulp and paper. Enron had 20,000 staff with about $101 billion in revenues. And during 2001, after regular accounting, Arthur Anderson, the accounting auditor, at the time, lied and said that Enron had real sales. But if they did their job and figured out that it was all fake and all fraud, they would still be in business. Arthur Anderson also went bankrupt. They used to be one of the accounting firms. Now, without Arthur Anderson, EY, PwC, KPMG, and Deloitte are the remaining accounting firms. Arthur Anderson used to be on that list, but they lied about Enron's accounting. And now they are bankrupts. All clients left and they went bankrupt due to the Enron situation. So 30 million of self-dealings by the chief financial advisor happened. $700 million of net earnings disappeared. $1.2 billion in equity shareholders disappeared. Over $4 billion hidden liabilities. So they hid their debts in companies that they in smaller companies that they owned. So Ken Lay was the CEO of Enron up until 2000, and Jeff Skilling took over. And then Jeff Skilling was the CEO in 2000, 2001, and then he resigned. Andy Fastow was the chief financial officer, and he put together a lot of the accounting tricks that were used to make up fake sales and fake profits. And David Duncan was Enron's chief auditor. Anderson, his job was to check Enron's accounts. He shedded thousands of Enron related documents to hide them from the Securities and Exchange Commission. So Arthur Anderson, they were supposed to tell everyone if the sales and profits were correct, but they didn't. They made up the numbers. They said that they were correct, but they lied. They weren't correct. And Arthur Anderson, they went bankrupt because they lied about Enron's financial statements, saying that they were correct when they weren't. And then Sharon Watkins was a whistleblower that told everyone about what happened with Enron. So integrity is so important. That's why we're talking about corporate social responsibility right here, because integrity is so important to a business. Without integrity, these types of things happen. So without integrity, companies like Enron happen. So if you don't have integrity, if the company doesn't have integrity, they may make up accounting statements and lie about their financials and commit fraud. So that does happen when companies don't have integrity. So that's what happened here. And yeah, so that was a big problem here. So what they did was they did this thing called mark-to-market accounting, where if they got a deal to make $300 million on something, and it was over like a 10-year period, they record that $300 million right now as revenue. So that was a big problem. Like they were recording amounts that they did not receive yet as revenue, and the amounts may not even ever be received. They were also making up revenue numbers that they said that they were going to have, but they didn't have it. So then based on this, the 62% of assets held in corporations retirement plan consisted of Enron stock, and then the most of that money was gone because the company's stock went to zero. And then there's a lot of issues with the relationship between Citigroup and JP Morgan Chase with Enron. And Enron was lucrative investment banking business for the banks. So the banks lend money to Enron, and that they're making interest on lending money to Enron. And then since the markets in which Enron traded were largely unregulated with no reporting requirements, there wasn't a lot of information available about the profitability of Enron's derivative activities. This is why we need regulation. This is one of the reasons why we need a certain amount of regulation to prevent situations like Enron. This is why we have regulation, because regulation will prevent a lot of Enron type situations. So like a certain amount of regulation is needed, not too much. Like we can have too much regulation also. It's just good to have in the middle. So balance, like have a good amount of regulation, but not too much or not too little. So that's very important to prevent companies like Enron. Because if there was regulation, a thing like Enron would not happen. So why did Enron scandal happen? Due to the lack of corporate social responsibility, situation ethics, and get it done business pragmatism. If a company like Enron was doing a lot of the corporate social responsibility stuff we're talking about today, they probably would have been less likely to be in this situation with all the fraud. And due to large discrepancies in attempting to match profits and cash, investors were typically given false or misleading reports, as it was difficult to estimate cost and viability of contracts. And then there's a lot of corporate arrogance and market euphoria, high risk deals that went south or sour, deceptive reporting practices, lack of transparency in reporting financial affairs, excessive interest in maintaining stock prices. So the impact of this fraud, thousands of employees lost their jobs, as well as retirement savings for the company. The pension fund for the employees was went to zero. Enron fired 5,000 workers, 1/4 of 21,000 employees. Laid off workers received $4,500 severance payment, no matter how many years they had worked for the company. Lower level employees were prevented from selling their stock due to the 401k restriction, and they lost their life savings. More than half of the employees invested about $1.2 billion in Enron stock. Those shares are now nearly worthless. So Enron shareholders received limited returns in lawsuits despite losing billions in stock prices. So then at Enron's peak, its shares were worth $90.75. And then when the company declared bankruptcy, they plummeted to just over $0 in January 2002. So plans to develop natural gas deposits being cut back dramatically, lose their source. Enron's fraud prompted the U.S. Congress pass Sarbanes-Oxley corporate accounting law, which forces corporate executives to take personal responsibility for the accuracy of company accounts, suffered economic losses. So this led to the American government to create compliance standards for auditing and public accounting. Just to so George W. Bush, the president at the time, signed the Sarbanes-Oxley Act in 2002 just to prevent accounting scandals. So this act caused a lot of consequences for destroying, altering, or making up financial statements or defrauding shareholders. So they created the Public Company Accounting Oversight Board to inspect public accounting firms and register them and modify audit standards. So they did a lot of those regulations to prevent something like Enron from having in the past, in the future. Also, there has been a change to how corporate boards deal with their financial auditors. So they have to provide a year-end report of the internal controls they have in place. And Sarbanes-Oxley Act has reduced corporate fraud and increased investor protection. um, so based on this, it's so important to make sure that the company has integrity. So make sure that the company is honest and trustworthy and has integrity. So so you need to have the auditor Arthur Anderson should have verified that their financial statements were correct, and if they weren't, and told everyone, and they should have let the US government know if, like, the Arthur Anderson should have let the US government know and the Department of Justice know that Enron's financial statements were all fake. That's what they should have done. They shouldn't have just kept Enron going. They should have let the government know. Also, Enron should have followed generally accepted accounting principles. Documents shouldn't have been destroyed. So that would have been very important. And there should have been whistleblowers earlier that told what was happening. Yeah, there should not have been fraud or making of accounting.